basic. Now, the data collection that I've done for this was very, very thorough. Okay. Now, I'm going to be doing the data collecting for probably the next 12 weeks as well, because the market's going to adapt. August is a month of rangy markets, as you've probably seen this week. Okay. So for that reason, what I'm going to be doing over the next 3 months behind closed doors is continually checking the data week in, week out to make sure that this strategy is still relevant to the period that we're trading in. Now, I thought about this, and I know September is going to be more trendy in terms of the higher time frames than they are now. There's going to be more volume in the markets and more momentum. We can't rule out that momentum really is not that important for the 1 minute. As I said, you only need one candle. But in terms of continual opportunities that develop, September is going to be a very good month. November is going to be a good month. December is going to be a good month. August, September, October as well is going to be a good month. Okay. Now, I tested a total of 356 trades, totaling 60 hours of chart time. The sessions that I back tested were London 7 a.m. to 10 a.m., keeping it super simple, 3 hours only. And then the New York session, 12 p.m. So you get the London, New York crossover till 3 p.m. So again, just 3 hours only. Now, I done 228 trades in the London session, and I done 128 in the New York session. The variations that I did were 1 to 3, 1 to 3 break even, 1 to 5, 1 to 5 break even, at 1 to 2. All right. Now, the reason why I've done this is because I've done back testing previous to this. 1 to 1 wasn't viable. 1 to 2 wasn't viable. And then we just stuck to what was a good balance between good risk reward ratio and a very good risk reward ratio. Okay. The pair that I tested was pound USD, but I can assure you, I personally, and a lot of members, if you've probably seen in the 1 minute time frame, have traded EU, EJ, and UJ, and those 3 pairs work perfectly, but we'll go into that. Okay. Now, these are some of the stats. Okay. So 1 to 3 break even, 1 to 1, and I know that I forgot to add something here, but don't worry, I'll talk about it. 1 to 3 break even, 1 to 1 returned 172R over that amount of trades, 114 plus 58. Okay. Oh yeah, 172 trade, no, 50s. Yeah, trades. Okay. Now, unfortunately, based on the stats, this came in last place over 356 trades. Now, it's crazy that it comes in last place, but I just want you to know that this approach, 1 to 3 break even, 1 to 1, is still in the top 2 best approaches for trading this strategy, even though it came in last place. And I know you might be thinking, why? Well, look, I know numbers talk a lot of sense, and numbers are everything, and I say this all the time. 172R compared to what came, second to last, second and first. The difference is duration of sitting in trades and the amount of losses that you have to take before getting your profits. Okay, so the stats on this, based on 89 trades specifically, which was the 1 to 3 break even, 1 to 1, excluding winners. Okay, with the break even, you had a 16.85% loss from a winning position. Now you might be like, well, this is a lot. Well, if you think about the number 100 and then you think about the number 16.85, you can tell just from these stats alone that this strategy is so solid. And if you get yourself into the right trades, then it's not even a quarter. There's not even a quarter of chance that price could come back on you to stop you out. Okay, so in that instance, it's very solid. Only less than 20%, as you can see, though, less than 17% will come back on you and stop you out, which is insane. Which means you're looking to be trading at an 83% win rate. Now, I know it's not going to be the case for everyone straight away, but there are opportunities. And the reason for that is because the strategy is very solid in terms of the actual process of trading it. Okay. Now, if you don't use a break-even rule and price comes back on you, only 5.62% of those 89 trades would hit take profit. So now we're looking at why break even is so important. Now the percentage is very low, but remember it's only low because we're expecting price to go from a winning position back to a break even position and then go in our direction. So it's a no-brainer based on those stats that such a small percentage of trades will actually come back to break even and go back down. Meaning that if the momentum is down at that moment in time, then that's when you need to just realize that it's best to put that trade at break even and just accept that it is a break even if it comes back on you. Because there is only a small chance out of those 89 trades that price will actually come back and hit take profit. Okay? And if you're in the right trade, then in theory, 83% of them should go in your direction if you're on the right side of the market. Think about that. Okay. Now, this is 1 to 3, no break even. Now, you can see the stats slightly went up, okay, to 186R over those 356 plus trades. Now, 1 to 3 returns the most positive R, comparable to 1 to 3 break even. Now, the thing why this does work is the fact that the pullbacks on the 1 minute time frame are very infrequent when entering the markets correctly. But if the market wants to come back, so we're talking price literally moving to 1R straight away, pulling back slightly and then going in your direction, leaving your trades open without a break even will help you out in this instance. Now, over break even 1 to 1, this approach only has a 7.69% advantage. Okay, looking back at the other stats, only 5% of trades go back to break even and win. So even though this has an advantage, it's not a major advantage. If we were looking at these stats and saying to ourselves, well, yeah, this is 25, maybe 30% of an advantage, then it might be worthwhile not going break even. But just because of this, with such a small advantage, I personally, even though it has the higher R return, I don't believe is the way to go. My personal opinion, but these stats are here for you to do what you want to do, okay? Okay. Now let's move on to the next one. This is 1 to 5. Now look at the stats there, right? 208R. That's insane. And this is over 356 trades. Now, this came in 3rd place, and the return on your investment is absolutely huge. And the reason why is because you're using 1 to 5. The drawback is that the big numbers come with a lot of emotional and psychological barriers. And the reason for that is because you're going to have to hold your trades for a lot longer period of time. A lot of members starting out trading the 1 minute time frame will not be able to get past a certain time, a certain limit in terms of being in those trades without fiddling with them. Because of the frequency of the candles and how they fluctuate up and down and bounce left and right and whatever else, mentally, it will become very difficult. Mentally, it will become very difficult for you to deal with. But it's down to you. The numbers don't lie. It is the best approach. Holding trades for long periods of time, I've already mentioned that, and intermittent take profits. That is something also to consider, and I'll share something with you now. Told you I missed something. Look at that blank in the middle. Anyway, 1 to 5 break even 1 to 1 came in 1st place. And that's what it's supposed to say there in that little blank box. It came in 1st place. Now, if you think about it, 1 to 5 came in a good 2nd place, I believe. I put 3rd, but it's a 2nd place with no break even. So imagine adding risk management to this and going break even 1 to 1, how many losses you can avoid and what you can capitalize on. Now, the only thing about 1 to 5 break even is that almost 26% of your positions will lose from the get-go, which means that your winning positions are very infrequent and far and few between. Maybe I hope I said that right, but they're very infrequent. Okay. Now, if you don't use a break-even rule on a 1 to 5, look how the stats went down compared to 1 to 3. Only 3.37% of those trades, if they come from a winning position back to a break-even position, will win. So break-even obviously is the best option for a 1 to 5 break-even 1 to 2 approach. And this break-even approach only statistically has less than a 5% advantage over no break-even. Now, I don't know how the numbers worked out like this, and I'm telling you, I went over them 100 times. So I'll just be honest, right? In my personal and humble opinion, 1 to 3 break-even, 1 to 1 is the best approach to go mentally, emotionally, psychologically, and for more frequent winning trades. There are times you have to understand where you're going to need to increase your stop loss. So let's say you use a minimum of 3.5 for most of you. At times you may enter a trade where you go for a 5 pip stop loss. In that instance, you need to say to yourself, well, look, if I get into a 5 pip stop loss, is it really wise me going for a 1 to 5? Or if I get into a 3 pip stop loss or 2.5 pip stop loss, then could I go for a 1 to 5? I think you have to use discretion here, and you have to just use a little bit of logic in terms of making a decision based on that. If you want my opinion, I personally believe in your arsenal, how you should be trading this is 1 to 3, break even 1 to 1, and 1 to 5, break even 1 to 2. You see, you got that wrong as well, but that's supposed to say 1 to 2. Okay. So we've got this part out the way. Some very interesting stats there. Again, I will break down more stats to you over the next 12 weeks, just so that we know we're all trading the right strategy. But for now, does everybody understand this? Chat, I need to know, please. Now, I'm going to be honest with you, right? All right, perfect. I'm going to be honest with you. I've been trading this strategy, and I've been killing it. All right. I have been killing it. And for a lot of my positions, they have been 1 to 3, simply because I didn't really fully grasp or accept or was able to deal with the habits that I had from the strategy I've been trading for the last 4 years, which is thinking about overextended markets and exhaustions, etc., etc. But I can say this week I have perfected this strategy, and I have been getting 1 to 5s on a regular basis, 1 to 3s, no problem. And I have been getting 1 to 6s and 1 to 10s and a few more than that. And I'll just be honest, it is very possible to absolutely destroy the markets, but just please be patient. Just go for 1 to 3 break even, 1 to 1 for now. And then guess what? As you become more knowledgeable, as you start to learn different approaches, different little cheats, little shortcuts, little secrets, little this, little that, then start going for more. You guys are smart, and you know, if you get a 2 pip or 3 pip stop loss and you're normally using a 4 or 5, then go for a bigger target. Do you understand? But it's down to you. I'll keep working with you over the next 12 weeks. We'll do live sessions. Didn't say live trading, live sessions. I'll provide you with a breakdown of tradable opportunities every evening on GU. If you want another one, I'll give it to you. But obviously, let's see how we go with GU. And we'll do some recaps on the weekend as well, okay? Let's move on to the fun part. Just before we move on, does anybody have any questions? So while this question is coming up right now, I'm going to tell you, partials do not make sense in Forex. Okay? Okay, it does make sense, but for some reason on the 1 minute time frame, it makes no sense. And the reason for that is because when the market is in momentum, I can promise you, you are more likely to take profit than you are to lose that trade if entered correctly, without a shadow of a doubt. There is a 90% chance of you hitting take profit if you've entered the right trade with momentum. I'm telling you now, taken off partials at 1 to 2, we've done the maths last week, and in theory, you're just putting yourself at a disadvantage unless you're happy to take 1 to 2 or 1 to 2.5. And in that instance, I just suggest you just trade 1 to 2 if you're going to do that. Okay. I'm not going to be talking about partials today because I'm just telling you now they're a waste of time on the 1 minute time frame. Math, from a maths perspective, it just is not needed with this strategy. It really isn't. If you're trading the 5 minute, I get it. If you're trading the 15 minute, I get it. If you're trading the hourly, I get it. There's only so much the market can move in X amount of time and for that day or period before the pullback need to happen. But I'm telling you, you're trading the 1 minute time frame, and every move you take, if you can just lock it in the back of your mind, every move you take is based on one candle's movement, one hour's candle movement. So if the trend is down, you've taken lower high, and that bearish candle is pushing down, then guess what? That candle should just keep pushing down. If it doesn't push down, you're at break even, let it go, move on. Okay? You have the opportunity to take multiple trades per day using good risk management. Okay? 5 minute, you're good. 15 minute, you're good. 1 hour, you're good. 4 hour, you're good to take partials. 1 minute, I'm just saying no, no, no. Okay? No. Final thoughts. So the 1 to 5 risk reward ratio, break even 1 to 2, only had a 14.68% advantage over 1 to 3, break even 1 to 1. A 15% advantage. I know mathematically over the long run, numbers, etc., is much better. I'm just telling you from a personal experience, just getting started with this, guys, those that are new, those that I'm going to try this out, a 15% advantage at this stage in your career or your journey is not going to make a huge difference. Okay? If you're a seasoned vet and you're profitable and consistent already, and you can deal with the ups and downs and the intermittent take profits of 1 to 5, break even 1 to 2, then go for it. But if you're not, stick to 1 to 3. That would mean, and I've just broke it down there actually, out of every trade, 10 trades versus 1 to 3, break even 1 to 1, you're only going to win an extra 1.5% of your trades. You see, it's not amazing. All right. Now, the difference with trading 1 to 5 versus 1 to 3 is that you will actually lose 43% more of your trades. What do you think about those numbers, guys and ladies? If you're trading 1 to 5, you're going to be losing 43% more of your trades. Obviously, you're obviously going to get a bigger return on your investment, but it's much harder to deal with. I just promise you. Okay. And you're going to lose 43% more of your trades just to gain less than 15% more. The numbers are there. Just think about it. All right. It's down to you. And I've done that because I don't want to be responsible to say, yeah, 1 to 5 is the winner at 208 R. And guess what, everybody, let's go trade it. Because I know for a fact, everyone's just going to come back in the community and the group and they're going to be like, Rox, this ain't working. I want it to work for you. Okay. So get to 1 to 3, break even 1 to 1. We're down to you now.